Hi, let's talk about Biopath. It's a company that operates as a clinical, also the preclinical stage oncology drug development company. Actually, they're focusing on RNAi nanoparticle drugs in the United States. Snowflake analysis shows the health 5 out of 6. There's a bunch of risks, so the market cap is not so big, 40 million. The company is unprofitable and even not forecasted to become profitable within next 3 years. And also they printed a lot of shares out that is diluting the shareholders in the past year, and earnings are forecasted to decline by average of 22% per year over the next 3 years. So they have a lot of clinical stage drugs, and we'll be back on it. So latest share price and events. So actually they raised some capital lately, and there was earning updates, product updates that is leading to the market performance. 1 year return 15%. In the bigger frame, so they had upside and downs. 3-year return, for example, minus 80. 5-year return minus 98%. So those who invested years ago lost their capital. That is the main thing of my channel, is to teach people to diversify the stocks. So whenever you see the huge upsides, for example, in this company, there's a stock price target $12 per share, and that is meaning 72% upside. What does this number mean? Is it good to buy everything and this could be hitting the price target, or is it better to diversify by, for example, industry, diversify by time, by companies size, by growth and dividend stocks, and so on? But anyway, yeah, in bigger frame, if we look at the, for example, here, 1-year return currently 48%, but if we take a 5-year return, so this is actually decreasing very fast and very deep. Max size, yeah, we see here that they started, this chart starts at 2006. So those who invested then could possibly profit 600, and then look at this drop within, yeah, half a year minus 90. This is actually the volatility in many companies, so be aware of that. And if we look at the drug pipeline that they have, so there's a lot of clinical stage, phase 1, second stage trial, phase 2, phase 1, and phase 3. They actually have even COVID-19 drug that is on the phase 3 trial. Initiation announced back in May last year. I'm not sure if this is actually stopped or something. But anyway, the latest news shows that the company announced clearance of investigational new drug application for the BP1002 in refractory relapsed acute. This is actually the leukemia patients. So this drug, Aquestive myeloid leukemia, trial to be initiated. And yeah, as you can see, the long-term price volatility considered as highest. That is pretty. Also, there's many biotech companies with small market cap are highly volatile. On the valuation side, simple Wall Street does not have any price targets, and I show you this one. So currently tip rank showing that it's $12 per share. Market Watch shows a little bit better, in higher points 13 and lowest 12. So on average 12.50. Basically the Market Watch shows about the stock price target. and future growth. So the earnings is forecasted to decrease by 22%. They have a lot of drugs that are on clinical stage. So that is, do they have, by the way, revenue? If we check this one, yes, they don't have any revenue currently. So that is the reason why they push the shares out. But we'll be back to that. Also, the earnings per share, I guess, yeah, same here. So the earnings per share is forecasted that they might increase by next quarter, but decrease since that. And past performance, historical annual earning growth decreased by 10%. And the company is unprofitable currently. Financial health side, we see that the company is debt free and they do have a lot of cash, 28 million of cash. Balance sheet looks green. They're not paying dividends. And skip the management side. Ownership, yeah, no insider transactions. Ownership breakdown, mostly held by general public, almost 91%. Institutions 8.5, insiders 0.4, private companies only 0.3. Top shareholders, I see here Vanguard is added. Yeah, that was reported back in June. 76%. So mostly there's companies are adding. Morgan Stanley decreased almost everything, and also the Merrill Lynch decreased as well. And I guess yeah, Finvish shows that it had the best peak within the year back in mid-February, as many of the biotech companies high point $24.34 per share. So I guess this is raising, but be careful, guys. This is actually the third top. This is a short-term line showing that they're decreasing, and yeah, they might be happen something, but I'm not sure about that. So be aware of pump and dump things that is going on. Many of the stocks that are showing not so good fundamentals, they are short squeezed, and many of the people losing their money within this attractive things such as higher returns. So be aware of that. This I think this is a potential one also, because shares outstanding keep increasing, no sales at all. The drugs are only in phase 1, phase 2, okay, phase 3, the COVID-19. But anyway, this could be shorter. And yeah, all time also 93%. But anyway, the investing.com summing the stock for long-term investors as a neutral, and only by technical indicators as a buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one. And also see other videos on my channel.